With the most recent turbulence in the market, top quality king dividend growth stocks are now on sale and offering mega starting dividend yields. In this video, we are going to go through 3 different dividend stocks that are offering a major opportunity for investors who are looking to pick up some of these high quality dividend kings. So make sure you stick around, drop a like down below and subscribe, and let's get into the first dividend king. So the first dividend growth king that's on sale as of right now is PepsiCo, one of my personal favorite long-term holdings that is also a 93 on the dividend safety score. Now PepsiCo is currently trading down around 12% year to date at around $157 per share as of filming this video. Basically sitting flat on the 52-week range low, with the 52-week range being 155 and 196 as the high. Now zooming out, there's good reason on why I call PepsiCo a dividend growth king, and that's because Pepsi not only pays a nice decent starting dividend yield, but has massive dividend growth and has had massive share price growth on top of that. Looking at Pepsi in the max time frame, it's up 664%, and that's not even dividends included. Now this stock is offering around a 3.1 to 3.2 forward starting dividend yield, which might not seem all that high compared to maybe some of the other higher yielders out throughout the market, but keep in mind, this stock does have some massive dividend growth, and you're not only going to be buying this stock for the dividend, of course. This stock has grown like crazy, but looking into the dividend growth over the last, let's say, 10 years or so. 2014, this stock was paying around 57 cents per share per quarter, and now 10 years later, it is now paying over double that on a quarterly basis, around $1.27 per share per quarter, with most likely more dividend growth ahead. Now, as you can see on the max time frame for Pepsi, for example, there's only been so many significant times in the past where the stock, as far as share price, dips down, but then not all that long from there, it starts going up and reaches new all-time highs. Now, I'm not saying that without a doubt, no matter what, Pepsi, for example, is going to be going right up from here or reach all-time highs from here. But I'm saying, historically speaking, looking at the chart, it's done that every single time without any exception. So for investors that do have a long time frame ahead of them and that are looking to hold on to a stock that's not only paying over a 3% starting yield, but also has nice healthy dividend growth and also has always recovered every single time historically, this stock could definitely be a good option and could definitely be a once in a decade opportunity for investors that are willing to weather the storm. Now I promise you, I'm not only going to pick soft drink stocks, but Coca-Cola is the next dividend king that's on sale right now. Now Coca-Cola is offering around a 3.5% starting dividend yield, which is higher than we've seen in a while, and on the dividend safety score, it's sitting at an 80. Now ticker symbol KO is also down quite a bit year to date, down 16.47% on the year to date time frame. Over the last year though, down 4.63%. So Coca-Cola, this stock has been beat up actually for quite a while now, and it doesn't really seem like there's any sort of end in sight. Now for me personally, I remember buying Coca-Cola in the 40s back in 2020 when Coca-Cola was actually trading in the low 40s for just a split second there. I bought a bunch of shares in the low 40s and I've been holding on my shares for years now. Now I say that once again as a reminder that there's not going to be all that many chances throughout history to pick up some of these really high quality single stocks at lower than normal prices. Now once again, I say that to say that Coca-Cola might still go down from here. There's a very good chance that it could even break below $50 per share, but the 52-week range being $51.55 as of the low and $64.99 as of the high. This individual stock has grown pretty significantly over the past, up around 377% on the max time frame without dividends included. So once again, there's been very few chances historically to buy this stock on the dip. And if you are in the market to try to pick up some high quality dividend king names that have a long history of not only growing in share price, but also paying dividends and raising them, this could be another option for you. Now looking a little bit deeper into Coca-Cola's starting dividend yield, it's right around 3.4, 3.5% forward starting dividend yield. This one also pays a dividend on a quarterly basis, and looking zoomed out on all the dividends that Coca-Cola has paid, it doesn't get much more beautiful than that. In 2014, for example, it was paying around 31 cents per share per quarter, and as of right now, around 46 cents per share per quarter. So Coca-Cola doesn't necessarily have as much dividend growth as Pepsi per se, but I do think this could be an opportunity to maybe start nibbling on some shares, or at least if not, to have Coca-Cola on your watch list and keep an eye on it if it does drop down any lower from here. Now, just to keep it in the fast food soft drink fashion for this entire video, let me explain why McDonald's is actually also offering a potential deal for dividend growth investors with a longer term time frame ahead of them. Now, McDonald's is currently offering around a 2.71% starting forward dividend yield, and as you can see, it's offering a higher starting dividend yield than we've seen in several years. And of course, McDonald's has a very safe dividend, a 77 on the safe score. Now, McDonald's performance year to date is also not all that great, down 6.7% year to date. Over the last year, though, McDonald's is in the green on the max time frame. This stock has outperformed many other single stocks across the entire market. Considering just around 10 years ago, McDonald's was trading around $90 per share, now at $246 per share. And keep in mind, this is very close to the low end of the 52-week range. The 52-week range being $234 and $299 is the high. McDonald's could be offering a starting opportunity for an investor that wants to load up on a stock that's most likely going to be around forever and a single stock that's been growing like crazy over the past few decades. Now, just like Pepsi and just like Coca-Cola, there's been very, very few events, historically speaking, where you sort of get a buy the dip opportunity when it comes to something like McDonald's. If you look over the past, say, 5 or so years, there's been a few moments where it's dropped maybe $50 or so. And even though, of course, McDonald's is not trading all that far away from the all-time high, it is still at a dip right now. It's around $70 down from the all-time highs of right now. So I'm not saying that as of right now, it's a perfect moment to buy McDonald's, but I'm saying that it's at least worth to have on your watch list. And I'll most likely start grabbing some shares when it gets a little bit closer to $200 per share if I am lucky enough to do so. But for now, it's definitely on my radar. We went over McDonald's growth as far as share price, but as far as dividends go, it's offering a 2.66% started, which once again is not the highest across all single stocks in the market. I get it. I know you can buy treasury bonds right now and get a 5 or 6% guaranteed yield, but this is a stock that you're buying for massive growth potential in share price, but also getting paid 2.66% along the way with a very safe, healthy dividend, which also has been growing like crazy. Look at the size of this dividend growth. If you look around 10 years ago, 81 cents per share per quarter, and now just as of recently, now $1.67 per share per quarter. The dividend growth is definitely there. They've been growing their dividend very consistently on a yearly basis, so investors sort of can expect it at this point, at least for the most part, unless something major changes. McDonald's is definitely worth looking into, or if not, having it on your watch list. So there we have it. Those are 3 dividend kings, Pepsi, Coca-Cola, and McDonald's, that have all performed historically very well, but also have historically been offering a pretty low starting dividend. But because where they're trading right now are offering sort of a surprising accidental high yield for investors willing to enter a position. Now, that being said, I totally understand if all 3 of these different names need to drop down a little bit more to maybe reach some of your personal price targets, but they should definitely be in your watch list if you are a dividend growth investor like myself. But now I want to hear from you guys down below out of Pepsi, Coca-Cola, and McDonald's. If you could only buy one of the stocks as of right now, which one would it be and why? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.